Are you DIYing your books only to wonder if you're doing it correctly? Or perhaps you're shelling out your hard-earned cash and you still don't know if it's done correctly. Don't worry, I'm going to share our 5-step process so you, even if you're not a QuickBooks expert, can determine if you have some red flags in your books or not. Because let's be real here, your file, the work that's done in your QuickBooks is the catalyst that starts your whole tax strategy process. And if your books, if that initial documents are inaccurate, incomplete, wrong, you really could be paying more than you should on your taxes, and nobody wants to do that. Make sure you hang out to the end. I'm going to share 3 common missed expenses in your QuickBooks file, aka tax deductions, and how you can ensure that your file is not missing these. But real quick, if you are new here, my name is Cheryl, my business partner Katrina and I, we help entrepreneurs put more of their revenue into their personal account, because otherwise, why are you doing all this? So let's just jump into those 5 tips.
The first thing you want to check in your QuickBooks file is when was it last reconciled? Reconciliations are so important, they cannot be overlooked, because what that does is it compares your QuickBooks activity to that in your bank account, your credit cards, and any differences need to be understood. So often, even using software with automations, transactions are duplicated, missing transactions, and the last thing we want is to have expenses not get run through our QuickBooks file. So here is how you check for reconciliations. You come on over to the bookkeeping tab. Down at the bottom, it says reconcile. You will see this screen if you've never reconciled your account. And real quick, I'm not showing you anyone's account. I'm showing you a sample company that QuickBooks has made up so people can play in the software. So there's no goods here to be seen. But if you see this, it means it's never been reconciled on your computer by you. And that, which may be okay if you have an accountant. So just hit get started, get rid of these prompts. All right, now here is the thing I want you to look for. Over here on the left, see how it doesn't say like last reconciled date? First, you can pick what account you want to reconcile or what one you're worried about. If you are doing an audit checklist, you should check all of your banks and credit cards at a minimum. And you want to just see the last reconciled date. Since this hasn't been reconciled, red flag. Let me show you another quick way to see what the last transaction was or wasn't reconciled. If you come up to this gear icon up here on top, there is this thing called the chart of accounts. It's just like a big filing cabinet, but your bank accounts, your credit card accounts are all listed in here. If you hit view register, see how this has an R next to it? That means it's been reconciled, and that's just because it's opening balance, but nothing else has been. If you see these like green boxes, that means it's been pulled from the bank feed. Okay, so step 1, check for reconciliations. Now let's jump into step 2. But before I do that, I want to let you know we have all of this available in an audit checklist. So if you would rather just go through a checklist on how to do this, link in the description, completely free. There's a whole PDF guide on these 5 steps to identifying if you have any errors in your QuickBooks or red flags. Okay, number 2 is the QuickBooks balance versus the bank balance. There is a major discrepancy. We need to know why. And if it never gets close, there's an issue. So let's look at this one. So for instance, our bank balance is only $200, but we have an $800 in QuickBooks. Let's find out why. So it looks like we had a deposit that was made in QuickBooks, but it hasn't hit our bank yet. That's what this means. So depending on the date, and today's date might be something to look into, or it's a sure sign that this deposit is in the wrong account. It's not accurate. So once again, how to get here to check for the difference between QuickBooks and bank balance. And I also want to be clear, this may not be equal every single day. In fact, most likely it won't, but it's when you check this register, can you identify why there's a difference, and are they ever the same?
All right. Number 3, where you need to check in your QuickBooks file that is usually full of red flags for an untrained QuickBooks user is the undeposited funds account. So we're going to go to our chart of accounts, click the undeposited funds account. Now, It's okay if there's a balance in here as long as periodically it almost zeroes out. But let's rewind and talk about what this account is used for. First of all, it's really just a fake account created by QuickBooks where deposits go when QuickBooks doesn't know what to do with it. And what you have to do is take the funds that are deposited into undeposited funds, say that 3 times fast, and you have to move it from there into the proper account. So for example, if you received a deposit from Stripe and QuickBooks doesn't know how to handle it, it may put it in this undeposited funds account. And then it would require the QuickBooks user to move it from undeposited funds into the proper bank account where those monies were actually deposited. It's a bit of a workflow issue. You don't have to worry about all that. What I do want you to do is go in, check your undeposited funds account, and does it ever zero out? It's okay if money balances like adds up and then eventually it gets to zero. So scroll through and check. Now, if you have a massive balance in there, red flag, ask your accountant or get some help. Perhaps it's fine, but most likely that isn't.
All right, step 4 and 5 to check for any red flags requires you to review some reports. Don't worry, it's much simpler than you think. And again, download that audit checklist. It will walk you through all of this. But over here on the left-hand side, we are going to go to Business Overview, Reports. And the first one I want you to check is your balance sheet. So your balance sheet up here. Scroll to the top. Again, we're in a sample company. Scroll to the top and let's check all dates. Run report. So what you're going to see now is all your bank accounts that you have. If you are missing a bank account that you use for business activity, red flag. You will not see your credit cards up here. Those are down below. So your bank accounts are up here. You're going to scroll down. This is that undeposited funds account we just talked about. So you should be able to explain that balance. Your assets. This is going to be anything above $2,500 single purchase that you would put on your balance sheet. So all those little items go on the report we're about to talk about, but any big items go here. So if you don't see them, that's a red flag. If you're working with an accountant, I would ask them, how do we get these big assets? A vehicle, once again, that your business owns, not that you own, should be on here. Scrolling down at the bottom, this is where you're going to see things that you owe. If any of these numbers are negative, that means there's a problem. It could be a starting balance, something else, but it's a red flag. Something's not accurate if you have a negative down here. It could be as simple as the balance you started with isn't correct. But anyhow, if you see a negative anywhere, top or bottom, it's something that needs to be investigated. Look into it. Again, if you don't see your credit cards here, this is where they should be. Your credit cards should not be up here under bank accounts. If they are, they were entered into the software wrong. Credit cards belong down here. That's another common one. Let's talk about one. Oh, I'm glad they have an example of it. Let's talk about sales tax. If you owe sales tax, if you collect sales tax and you are legally required to remit that, you should have a sales tax liability account. It will go up, it will go down. But if you don't have one, big red flag. We were working with a client who had a different accountant and different bookkeeper, and they noticed, we knew there was a problem with their file because they had no sales tax down here. It's like a very quick way to see a red flag. All right, so that's step number 4. Go through this balance sheet, comb over it. The top half is things you owe or own. Things you own is on the top half, and the bottom half are things you owe. Okay, own, then owe. Now let's look at your profit and loss. So your profit and loss covers a period of time. So I would do the entire year to date, maybe 2 years, it depends. So on top, we're going to start with your income, and then it's going to go to the cost, like to provide those. They're usually known as cost of goods sold. And you'll see that up there. Your income is typically reduced by cost of goods sold. But you want to go through, usually where you're going to see errors is down here in the expense account. Are there things that don't make sense? Click into some of these accounts like, whoa, $1,700 in professional fees. Did you code everything correctly? You can just click that and you'll see all the transactions that made it up. There's 3 in accounting. Oh, that is my accountant. Books, okay, that makes sense. Oh, 2 to lawyer, great. Or you could be like, oops, books by Bessie isn't actually accounting, so that's incorrect. Another thing you want to look for when you are examining your profit and loss statement, are we missing any categories? Like, oh my gosh, I have a huge cell phone bill. Why isn't that on here? These are all questions to ask and to raise. Give it, I like to call the reasonable check. Does this make sense? Jump into a couple of those categories to make sure they're being properly coded.
So at this point in the video, I want to give you 3 tips of expenses that most people are missing and as a result, paying more in taxes. But you don't have to. First, consider like Apple subscriptions, Audible books, things you're downloading probably on your phone. Where are you paying that? Are you paying it out of your personal account? Not the end of the world, but just make sure those expenses get included on your P&L so they don't get forgotten when it comes to tax time. Another one where people forget often is all your office supplies. Are you buying pens, papers, whatever it is, extra computer cords, and you're using your personal account? Maybe because it was combined with all these like personal purchases, Amazon, whatever. I get it. Just make sure, again, we're moving those over to the P&L because over the course of a year, they add up and they're definitely tax deductions. And then lastly, if you have a loan on your business, you're most likely paying interest on that loan. It just is what it is. We want to make sure we're capturing that interest as an expense because it's a write-off. Just like any bank fees you might pay. It's a write-off. So make sure those are included in your P&L. So I hope that gave you some clues on what to look for in your QuickBooks file to see if you're doing things accurately or the person you're paying is actually doing what they're supposed to do. It's just a quick way to check. Again, you can download this in a PDF format. The link is right down below in the description. And if you found this helpful or if you're running a business and you want to know how to master your finances, because truly, if you can master your finances, that's how you'll put more money in your account. Make sure you hit that subscribe button. We come on every Tuesday and Thursday with a new video to help you prioritize profit.